Hi, I'm Ray Meadows, Prince of Finance, and with me is my friend Hiromi.
Hello.
Last time we talked about market index, and Hiromi has a follow-up question about that.
What is a index funds?
Index fund. So this apparently is a complicated question. We talked about market index, which can be stocks or it can be bonds. So we can have stocks in an index or bonds in an index. Usually not both. The next thing is, if you want to actually invest in it, then you have to buy what's called a fund. And a fund can be a mutual fund, which you buy usually directly from a mutual fund company or a brokerage. You know, it could be Vanguard's mutual fund or Fidelity's mutual fund. Or you can buy what's called an exchange traded fund, and that you buy on an exchange through your brokerage account, and that's also sponsored by some big management company. So there's portfolio managers, and they buy securities that match the market index. That's a mathematical calculation that has the weights. So the key for them is buy those things in the same weights. But let's just make a really simple example.
Yes, please.
Last time we made our own banana and grape stock index, and I'm going to use fruits again. So in this example, we got mango.
This is a mango?
That's a mango.
Okay, I thought it was a banana.
No, that's a mango.
Whatever.
Apple and orange. Sorry, no bananas or grapes. So if these were three stocks out there, and I was a mutual fund manager, and I want to put them together and sell it to you. I get my basket. I put my amount of mango in there that I need. I put my amount of apple in there that I need, and I put my orange in there that I need. I've got an index fund for the orange, mango, and apple stocks. So then I can sell you a share of my fund that includes the individual stocks that I put into it.
So now this is you created a market index. Now
Fund. Okay. I put it by buying the stocks in the weights that they were in the index.
So you created a market index fund.
Yes.
Now
and I sell you the shares of this fund.
So now I can buy
the whole thing all in one shot. So you don't have to buy individual pieces. You buy the whole fund.
Through mutual funds?
Through a mutual fund or through an ETF. A mutual fund you buy from the actual mutual fund company. Maybe it's Vanguard, maybe it's Fidelity or Charles Schwab. An ETF you buy on the exchange using your brokerage account. You have to know the ticker. So this is just an example of how you're putting it together. But if we think about the real world, the S&P 500 stock index, as you've heard, is the 500 largest stocks in the U.S. So some manager had to go out there and buy every one of those 500 stocks, and that's a lot of stocks.
That's a lot.
And he has to get them in exactly the weight according to the index that someone else is calculating. And he has to manage that while you're investing some money in it and someone else is investing some money in. So it's a little bit of a complicated job, so that's why it takes a whole company to create a fund and sell it to people. But that's it. Now, that was just stocks and fruits, but you can also buy bond index funds. So you could buy, there's a ticker called AGG, which is a bond index fund.
Wait, can it be?
It could be AMO index fund. But we don't actually have that in the market yet.
That can be bonds, though.
It could be bonds. It could be bonds. We could have a bond index and create a basket and sell shares in that basket as our fund. Yeah.
So I can have the same exact thing, but through bonds.
With bonds instead. Yeah. Okay? Okay.